Hey, good day, everyone. Happy to see you here at our trading a smaller account. I've got to fix something real quick. I thought I fixed before we started, but there we go. Glad to see you're here, trading a smaller account. How many of you have changed your market posture maybe since we met on Monday? Anybody's feelings change anything about maybe how they're perceiving the market? Well, we're going to talk about that a little bit today, determine maybe if there are some changes that we need to make in adjusting the types of trades that we might be looking for. All right. Now, I hope you are following me on X. I'm Connie Hill, CS. Brent Morris, who's in the chat, who's here to assist as we need. He is BrentMorris.com or Brent Morris CS, and you'll want to make sure to follow us and kind of see the tidbits of information that we send out on a daily basis out into our X account. I've got to say hello to so many friendlies here. We've got Sia, RTR, APA, Miss Fortune, Miss Street Fortune, Art, APA, Lola, John the Noble Savage, and many others, Kevin JL, Racebird, and so forth. Glad to see that you're here today. Let's go through our disclosures, and then we'll lay out what our agenda is going to look like here today. Options carry a high level of risk and are not suitable for all investors. What we talk about today is for education and informational purposes only. Don't consider it a recommendation. We will be using the paper money software application. Remember, that's for education only. It's a fantastic way to learn, but it's not perfect. There are some differences between paper money and your live trading software. Past performance is no guarantee of future results. Now, in this class, typically, we're going to take a look at the market, see if maybe our outlook or posture maybe should have changed or might be changing. Always going to look at some new example trades and manage some existing trades. Got a pretty full agenda for you here today. The rules in this class are a little bit different than maybe what they might be for other classes, in that we're taking the assumption that you're working with a smaller account. In this class, we're going to use 20,000. Your small account might be different. Might be $5,000. It might be $30,000, right? Might be completely different, or even not so much your account size, but the amount that you're dedicating to maybe shorter term positions that you're trying to maybe kind of generate some income in that account. So maximum position size is $5,000. If we look at any one stock position, we don't want to risk more than $400 to $500 in any particular trade. So that's going to help us focus on short to intermediate type opportunities as opposed to a longer term holding. We're going to go both bullish and bearish directions. Bullish strategies that we might use, and we've used several of these. Long calls, long stocks, short puts, buy right cover to call, short put verticals, and long call verticals. And bearish, which we haven't had a chance to get into a whole lot this year. We would look at long puts, long put verticals, short call verticals, and sometimes we'll discuss strategies like iron condors and calendars when it is appropriate. All right. Now, these are not the only strategies that you personally could trade. There are other strategies. Brent does a fabulous job in teaching advanced option strategy. I believe that's on Thursday afternoons. If you want, Brent, go ahead and tell him the time that you teach that, where he will address maybe some more complex strategies. But those are the main ones that we're going to stick with in this class, although just know there are others. Brent does a fabulous job educating people as to what those might be. All right, let's go ahead, jump over to thinkorswim. I've got our Dow Jones up here. Now, one thing you guys should be aware of is that the jobs report came out this morning, right? And what did it say? Did it have a lot of great news for us? Did you see anything, any headlines on that, any stories? Well, it turns out our job growth, finally, we're starting to feel it. We're starting to see it. And they went back and revised June and May, and man, they whacked them really good and said, oh, what we reported previously was overstated, okay? And instead of there being, I think it was supposed to be like 141,000 jobs, that came back, or 110,000 jobs came back at like 76,000 jobs, new jobs created. Whoa, from what was expected, significantly lower. So markets were a little frosty to begin with. They gapped down. It's interesting because I want you to see what they're looking like right now. Okay, here's the Dow Jones. It fell at one point to this Fibonacci level. This is an old Fibonacci I've had on here for months. It's interesting. It fell to the 78.6 level. And then what has it got going on right now? A hammer candle. Now, we're nowhere near the close, right? But if the market were to close right there, we would be sitting there with a potential reversal candle, which at support means, okay, possibly there might be a little swing back up, but definitely on the weaker side this morning. SPX, gauge of the overall market. I don't have a Fibonacci on this one, but yesterday it and the NASDAQ put in brand new highs yet again. But itself is also forming a little bit of a hammer. This red line is the 30-day moving average. So it's not like it's that far down. I mean, it did drop, but it's not like we're trading down at the 100 or the 200-day moving average. And so this might indicate, well, maybe a little bit of weakness that we might want to be aware of, right? With the short-term possibility because of this hammer candle, if it looked like that when we close tonight, we might think, well, okay, maybe it's just some short-term momentum pullback. Maybe it will revise itself the next trading day, which would be next Monday. A lot can happen between now and Monday, Canada. NDX looking very similar as the NASDAQ or as the S&P 500 down at the 30. It's got that hammer candle. The other thing, I've got the RSI on here, which is an indication of what, the momentum of the stock or the index, whatever we happen to be looking at. And it had been up here above this 70 area for a very long period of time. And you can see this is a 3-month chart. This is the first time it's even gone this low in the last 3 months. If I switch that to the last 6 months, well, yeah, back here in this little pullback, the RSI was down in these lower levels and headed down and stayed below 50 most of the time. And it's at 52 right now, but it'll be interesting to see if it drops lower. If it pops up again by the end of the day, we'll hopefully have a better gauge at that point. Okay. Let's take a quick look at, Sia says, there was a bunch of layoffs announced. You're right, by Google, Meta, Microsoft, Accenture, Pricewaterhouse, because of AI entering into the picture and possibly making things more efficient, then we are seeing some layoffs. You're absolutely right. And we finally saw a reflection of that, which we really haven't quite seen. We kept hearing, oh, it could be coming. Oh, it's going to be coming. And the impact from tariffs, it's going to be coming. We'll see. We'll see what happens, right? Well, a lot to play out for sure. Okay. I want to take you to the VIX, the volatility index. We've got to look at that first. And we have been down in these lower areas, right? Below 15, 12, 13 before the big situation in April. It's come back down. And more recently, right, this summer, we've had really low volatility readings here on the VIX. So we have been down in this lower area. In fact, it got down to 14 and change, which is fairly low. And then yesterday had a pretty decent spike. Today, really spiking up earlier in the day, clear up here at 21. So where we're, 21 is where we, 20 and 17, 18, that's when we're kind of like, oh, a lot more volatility is going on here. Oh, this might be starting to show up in places. However, we're off the highs of where the VIX ran up earlier today. Again, that coincides with what we're seeing in the markets as far as maybe a bounce off those low points, having those hammer candles. When we see a hammer candle, just to reiterate, many people like to wait for confirmation. Okay. There are some people that don't. They might wait till closer to the end of the day. But some people say, I want to see that confirmed. And what does that mean? Seeing what happens the next trading day, which in our case is going to be on Monday. All right. Salient Joe says, days like today might be better to wait for more confirmation, either up or down. Yeah, possibly so. All right. Well, with this in mind, primarily we have focused on bullish strategies. And quite honestly, that's what the market's been calling for, right? If the trend is your friend and you want to follow the trend of the market, you want to follow the trend of the sector, the industry group, and whatever the stock is doing, that has really pulled us in bullish directions. We're going to explore a little bit with some bearishness today, okay? Watch list that I used to come up with today's trades came from a watch list we created in my short verticals class on July 24th, which was last Thursday. This is our new and updated watch list that we are willing to use for both bullish and bearish trades. If you want to see how we created that watch list, go to that short verticals class on July 24th. We do it right at the beginning of the class. I walk you through. Essentially, this is a subset of the S&P 500, NASDAQ 100, and a cross with the public watch list of penny increment options and stocks that are trading 2.5 million on average day. You might not need that strict of a criteria for stocks that you might be looking for, but for that class, for doing short verticals continually, we wanted to see higher volume. And here we might consider something as a stock trade, and we might not need necessarily that much volume for it. Okay, first up that we're going to take a look at, let's take a look at, Art says today you're a little bit more bearish. Yeah. Well, let's see what Bruce says here. 10% 52-week range, 135 to 155 from 2024 high supports. High support 62.10. I think, Bruce, you were probably making some of these comments maybe when we were looking at the SPX here. 62.10. Let's see where your 62.10 is. Oh, okay, here's 62, about kind of where it is right now, huh? Just maybe a little bit lower. Yeah, it's where you're seeing that height, some support in that area. Okay, back to Best Buy, BBBY, or actually just two B's and a Y, Best Buy. You guys might have Best Buys out by you. We have some Best Buy stores, you know, electronics, check out the latest big screen TVs and so forth, and appliances. Some retail has been doing really well, and some retail's kind of struggled. The last 6 months, we can kind of see Best Buy's been in a trading range, but in addition to being just in a trading range, it looks like maybe kind of the high points were starting to get a little bit lower. We had some horizontal support here, right about 65 and change, that it's been honoring, right? It's kind of just been bouncing in this range until the last couple of days. Now, yesterday, you might not have necessarily been convinced that this broke support because we've got some shadows here, right? I've drawn my line up here at 65, but we know it's kind of a range. So maybe yesterday, not so convinced because the candle was in the range of these shadows, but today looking a little bit more substantial there, okay? So given that we're seeing a little bit of weakness in BBY, and given that we're maybe going to look a little bit more bearish today, we want to get in as soon as we see an entry signal that we like. And we haven't focused a lot on bearish entry signals, okay? But what are some of the things you can look for? One, a breakthrough support, which is what we're seeing today. Maybe starting to see lower highs and lower lows. So maybe I'm going to drill in here a little bit. Maybe say on a run up like this, you know, it's trying to get back there, but it doesn't succeed, and you see it roll over again. That can be an entry, right? And it could be bouncing off resistance of a moving average or a horizontal or diagonal that you've drawn on the chart. Those can be ideal entries. Note that you're not looking for something that's been bullish, and is having a little bit of a pullback. That's not what we're looking for bearish opportunities, okay? We're really looking for weakness that's already established and basically trying to ride the gravy train. All right, let's look at Best Buy here. As far as, yeah, Katsaya says year-to-date down 25%. We can see that in those labels. I hope you have those labels. I don't have a think script for it right here. I'll have to put in my show notes. For those of you that are looking for kind of this little labeling system that shows you year-to-date, week-to-date, what's the P ratio, payout ratio, kind of some quick stats down, you know, percentage off its 52-week high and low, kind of some general information like that. All right. Let's go to the trade tab here, and let's collapse what we've got going on here. Where's the implied volatility? Would you say that's higher or lower? Well, whatever there is for today is certainly high, 66%. But as we kind of come out to the monthlies and the weeklies, I mean, the implied volatility, I'm going to say, is in a higher range because it's above 35, but it's not like tremendously high. It's not like 60s, 70s, and 80s. Okay, so I would say slightly on the high side, but not tremendously. Okay. Would that lend to more of a selling strategy or buying strategy? That could lend to that information. Today's volume so far is 803,000, so not quite to a million here yet. On this one, I'm looking maybe for just a shorter move, maybe for something to just stay below some resistance. So let's look here. We're going to look at the August or the September 19th. You know, I poked around a little bit in some of these weeklies, but I just wasn't seeing a lot of open interest. So when you don't see it, just go out to the monthlies, and that's what we're going to do here. So we're just going to go out to September. 20 to 50 days is kind of the range that many traders like to look for short verticals and long verticals. Okay, just kind of that range. But focus on where you see the open interest. All right, so we come out here to September, we're like, oh yeah, lots of open interest on the put side and the call side, which is great. That's what we want to see. Now on this, what I was looking to do here was to sell this 70 strike price. It has a 30 delta, 30 something delta, 20 something delta, maybe low 40 something delta. Can be typical. So we've got really a couple choices here. We're going to do this one, the 70, and then we're going to buy the 70-250 as our hedge leg, and it's going to create a credit for us. So we're going to say sell vertical. And to make our math a little easier, oh, good, we're going to just lock it in at 60 cents here. All right. So this means for every series of contracts we sell here, we would bring in a $60 credit. We get paid that immediately into our account, which is one thing that's nice about short vertical trades is you get paid at the beginning of it, and you don't necessarily have to close the trade out. We're going to, in our class, and what we do typically is we will put in an order to close it out early to try to capture the majority of this credit and not try to bleed every little last penny out of it. So let's see, we've got our postures a little bit more bearish. We're looking for bearish types of stocks, and we found something that just broke through support. So then the next thing is, okay, let's decide what strike prices to use and see if it gives us a good enough return. Let's check it out. Go to our calculator here. And this is a $2.50 white spread. So if we take 2.5 minus 60 cents, that should give us $1.90. Okay. 190 is our max theoretical loss. So yes, we are risking more in this kind of a strategy than what we have to gain. Why in the world would somebody do that? They might do it because of the high probability of success. And right, this column here is probability of expiring out of the money. This strike price has a 74% chance of expiring out of the money. Okay, so we might like that. Now let's see what kind of a percentage return this might give us. Okay, so if we say 0.6 divided by, that worked. Sorry, let me clear that out again. I have to adjust my keyboard here. 0.6 divided by 1.9 is going to give us a percentage of about 31%. Some people may like that. Go, yeah, I like looking for a 30-something% gain. I'm going to say it might be a little bit on the low side for 49 days worth of time for some individuals. Other individuals, they might be happy with it, or they might say, okay, let me see what I can get out of the 39 delta. This particular trade, we're going to keep it at the higher probability. And really, what do we want the stock to do? We just want it to stay down below 70 here. Well, where is 70? About right there, where my mouse is. Hasn't been above 70 for several days. Okay, it's been well below it. It's on the other side of this, what is going to be resistance, because now it's down below it, right? So it has kind of this little barrier, at least theoretically on the chart. All right. I said in this class, we'll try to lock in our gains when we get most of it, okay, versus waiting for every little penny. Let's go to, let's see if we get 60, my 60 is our initial credit here. Let's suppose we get 70%. Some might go 80% or 75% or 60%, right? You get to decide where that comfort level is. We're going to start it out at 70%. We're going to multiply this by 0.3 because when we only have 30% left, that's when we want it to go buy back. So we're going to go buy it back at 18 cents. Well, how many of these contracts can we do? We're willing to risk 400 to 500 in any trade, and we're risking 190. It's going to mean what? We're going to be able to do, are we going to be able to do 3 contracts here? No, that'll put us over. We can only do 2. We've got to do 2 contracts here. If we did 3, it would put us over the 500. Okay, so that's all right. We'll deal with that. Let's do create an opposite order. Oh, scrud, create an opposite order again. And then do first trigger sequential, then do an opposite order. Okay, so it's still at our 60 cents. Create that opposite order, and we're going to say, all right, you get to 18 cents here. We're going to go buy it back. We're going to let thinkorswim have that order just sitting out there, let it execute for us, I should say. You know, you could be out walking the dog, getting a treat, whatever you want. Whatever you're doing is supposed to just kind of sit here and watching it, trying to catch it, right? Let the software do the work for us. We're going to hit confirm and send. I'm going to put this in our bucket of trading a smaller account, where all the trades that we're working on are going to go. All right, we got filled at 61 cents. Nice, we got a little 1 cent bonus per contract. All right, we like that. Next up, tell me what you think of this stock. Okay, so Best Buy, obviously a retailer. A lot of the technology stocks have really been doing quite good. One that's starting to show some weakness. Now, this hasn't been weakness for a long time. The 10-day moving average has been headed down for a little bit. The 30-day moving average is kind of plateauing here. But what I'm looking at is ran up here, made a new high, but then did it stay here at what should have been support? No, you broke it. All right, did it stay at this next level that should be support? No, it fell through it, right? Based on, they had some earnings last night, and I think to some extent, I think Coinbase earnings, I didn't listen to the call to see what they said, but anything that's kind of crypto related has taken a hit today based on whatever Coinbase said, okay? MicroStrategy has been involved in the crypto arena, okay? So it is breaking down through support. Now, it also has, at least now, a hammer-ish looking candle. Now, it's not perfect. We'd want to see the body get smaller here. So we have a really small body here and a real long shadow to really make it a better looking hammer candle. And we'd also want to see it at support. We'd want to see a reversal candle at support to have it become more meaningful, which means it might need to drop a little bit more. You can see maybe down in this area about what that is, about 359 or so. That is looking like maybe the next support area. So in this case, it's like, well, it's a hammer, but if it's not a support, not as meaningful. And it's just broken through 2 support levels. So there is reason to maybe look a little bit more bearish on this particular stock. All right, let's go over here. And let's see. Somebody's trying to help out Shark there. This class, Big Shark, is on Fridays at 12 Eastern and Mondays at 12 Eastern. Okay, so yeah, we'll have the weekend, then we'll be back here on Monday again with this class. Gives us a nice opportunity to really monitor trades frequently, so we can kind of keep in touch with what's going on when we meet twice a week instead of once a week. Okay, MicroStrategy here. Because this hammer is not at support and it may have some room to drop, instead of doing a credit spread where we're looking for it to just stay below a certain amount, we're going to do a long put vertical spread, which is a debit spread, with the idea that maybe it will drop for us. Okay, so we'll see how this works out. On this one, I'm looking at, now it traded 8 million shares so far today. And I'm thinking when I was checking out the August 22s, I think this is where I found 380. Actually, I might have to switch this up a little bit. The stock's at 385 right now. And I was looking at doing the 385 Oh, I was actually looking at 380, 375. We're going to rotate, okay? We're going to go to our at the money strike price, which is 385. Current price is really close to that right now. And we're just going to, we have enough open interest here in the one with 21 days. If we were doing, 40 contracts or 50, we probably would want to see more liquidity than this, but we're just going to do a small number. We've got a small account. We're not going to do a lot. So let's do 385. Do buy vertical. It comes back green. And I'm going to lock it in at 225. Okay. So this one we're saying, all right, we're willing to pay 225, but we need the stock to move where? We need it to move below the 380 or lower. Where's 380? Pretty close to where my mouse is. Is that a big move? Not really. Has it been? It was there earlier today. In fact, it was down much lower than that today. Okay, so we're not looking for a real big move for the stock to make for us. But again, it still has to move. Now, in this case, we are doing something that we're not looking for the probabilities more than anything. We're just saying, hey, we're willing to risk this amount to get a different amount. What's that different amount? $5 minus 225 is going to give us a value of 275. So we're willing to risk $225 to make $275. So this is not a high probability trade, although if we wanted to be really conservative, we could construct it that way. We could come down here and say, oh, well, let's buy the 395 or the 390 and sell the next out of the money option. We could do that, but because we're saying, hey, let's give it some room to drop and see if it can pay us a little bit better, that's what we're going to look for. All right. If 275 is our max theoretical gain that we can get on this, the $5 minus 225 is 275. If 275, what if we get 75% of this? If we get 75%, kind of like take a chunk of this pretty generous potential gain, then we're going to say, yeah, let's do that and get out and move on instead of trying to get every little last bit. Stocks can rebound, stocks can find support, markets can change. We've been in primarily bullish conditions, but now we are starting to see a little weakness. So we're trying to say, hey, let's posture for a little bit of weakness here. All right, so 275 times, I'm going to multiply this by 0.75 here because we want to add that value, 206 to 225 to be our net debit to exit on. Now on this, we can do two contracts because we would position size for a max loss of 450. That fits in our range that we're looking for. We're going to put first trigger sequence. We're going to put in an opposite order to say if we get our profit target, we're going to get out. Okay. So 206 plus 2.25 is going to give us 431. So we're going to buy it back at 431. We're not going to try to milk it for everything it's worth. I do that with my toothpaste. I do that with my cans of soup. If I'm cooking or sauce, I'll use the, the little scraper to get it all out. Vertical is not always the best way to approach it. Okay, we're going to make this as a good till canceled. Let's see. See, it says I have a lot of guts to trade the at the money. On the short put vertical, we didn't on the short put vertical. We went out of the money. This one is a long put vertical, and we are doing out of the money on it. Yes. Okay. And again, it is a little bit more aggressive, but we don't have to be aggressive. We could range it down a little if we wanted to. We're going to go ahead. We're going to hit confirm and send. And really what we're hoping to do is see if the stock really moves down, see if we maybe can get a chunk of that return. Sometimes markets will fall a lot, or stocks will fall a lot more quickly than they go up, right? They say it's like climbing upstairs and dropping out the window. I'm going to put that in our trading a smaller account bucket. And we got filled at our 225. All right, we're liking this. All right, you guys are helping each other out. Brent's helping you out here as well. I appreciate that. All right. I hope all of you have become a subscriber to our Trader Talks channel. I really do. All you have to do is click that blue button that looks like YouTube, but it's blue and it says subscribe. You click on that, that will subscribe you to our Trader Talks channel, where we have a lot of good information for you, and it makes it easier to find it. Okay, I love this feature of YouTube. I subscribe to a lot of different podcasts and channels, and man, it just is slick to help you find what you're looking for. Okay, so here's our Trader Talks channel and our coaches. Right now we're in trading a smaller account. Well, it lets you know what's coming up next. Well, after me, we'll have Cameron May will be doing some advanced charting. Okay, so we'll go from maybe something a little bit more intermediate to advanced there. And then we have some different playlists for you, not only of our classes, but some other things. What I'm trying to make you aware of right now is our bite-sized content, which are short videos that are 10 minutes or less. Okay, Scott did a couple of ones recently. These are 8-minute videos. I've been doing some short videos on using the thinkorswim platform in just little pieces. You know, how do you do this part? How do you do that part? Right? When you're learning to trade and you're learning a platform, it's a lot to really try to put it all together. And so these are just little sections of, okay, if you want to build a custom toolbar, this is how you do it. If you want to create a grouping, this is how you do it. Just some little things like that. Okay. So I just want to bring your attention to that and encourage you to subscribe. All right, let's head back over here. Let's look at one more trade, and I do want to take some time to review a couple of our ongoing trades. And actually, I think I'll do that now, and depending on how many questions you have, if we have time, we'll go back, and I've got another couple of trades we could look at, okay? I want to talk about trading over earnings and the idea of maybe not trading over earnings. On Monday, we put on a trade on semiconductor. And when I was researching it and doing it, I was thinking earnings were going to be like at the end of last week, that we might have a chance to have a move in it. And somebody brought to my attention, guess what? They have earnings Monday. So I said, okay, we're going to be out by Friday. Okay. Because we're in class, we're going to have to get out in class. Now, you don't have to get out during class. If you're doing this as a paper trade, you could watch it, maybe see if you get a little bit more back. But really, the trade's not working out for us. We were seeing this bounce off the 30-day, and it's just kind of flooded, pulled back a little bit, and we do want to avoid the earnings. Might be great earnings, might not be. We all got to find out at the same time. And so it's just the idea of being risk averse. Okay, so we're going to come over here, activity and positions. Here's our on. We're down about $73. We're just going to exit the trade. Quickest way maybe to do so is come over here and find our on semiconductor. We had put in a get out order if we got a chunk of the profits. We didn't. We're going to take a $73 loss for 2 contracts, so 146, I guess, loss. We're going to do a cancel replace. We're going to adjust that price. We're going to submit it and say we're done. We are going to book a small loss on that trade. All right. To cancel our order, I'll make sure it executes hopefully before we end the class. Those of you that have a reason to not want to trade over earnings, this is going to be a great example for you. A trade that we put on, same thing. I was thinking earnings were a little bit later, and they really weren't. When did we get in this one? I think we did just get in here. That was Monday, July 25th. I've got my little green dot there letting us know. Here, this stock had been trending up very gently, right? 30-day moving average going up, 10-day moving average sloping up. But it doesn't mean that their earnings are necessarily going to be good, or that their outlook for the future is going to be good. And these guys immediately yesterday just dropped. They had their earnings Wednesday night, Thursday morning, huge gap down. Now, I want to talk about a couple lessons to learn from this. One, why sometimes we want to avoid trading over earnings and somebody didn't get out before they announced. And 2, if you're already at a max loss, what do you do? Okay, I'm going to come over here to our monitor tab, come back here to our positions on this one. We are down essentially 100%. Is there any reason for us to try to close the trade out? Okay, I'm going to bring you over to the trade tab. I'm going to take you down to where our strike prices are, and both of them are so far out of the money. You know, we're really not going to get that much out of them unless all of a sudden they have great news and they run up. So no reason to try to really close the contracts. They'll just expire worthless when the time comes in 14 days if they don't recover. So we're just going to leave it open. Okay, we're going to leave it open, see if by some good news that it happens to go up again, and then maybe we won't take as big of a loss. The other thing I wanted to point out to you is that when stocks have a big drop like that, and a lot of times with earnings news, sometimes the bid-ask spread gets really wide. And you might be panicking and thinking, I've got to get out of this. And you go to get out, and the spread is so wide that it's more than what the max theoretical loss could be. So you don't want to panic, necessarily put yourself in that situation. Okay, let the spreads come on back down, things settle out, right? Towards the end of the day, things normalize, and then see if it's something even to do anything about. In our case, there's not. Okay, not unless it has a big recovery. Okay, so those are just a couple of earnings newses. A couple things that went that we followed our rules. STX, we've been in this for a couple of weeks. And this one, the 30 and the 10-day just been moving up really nicely, almost like railroad tracks. Okay, so nice trend. And it continued to go up. In fact, it had a nice run up after their earnings, but we had said we're going to be out by earnings, so we did. We got a partial gain on that one. Let's see here. We got our net on it was about $77 on 4 contracts, which yielded 308. So is it a big, huge gain? No. But we followed our rules. We locked in our gain. We avoided risk. And if we like STX, well, great. Maybe now it has a good entry signal that we want to pursue again. Okay. Yeah, Scott says, those overnight gaps down are tough. They are. They really are big. Now, Andy says, now what if it's expiration day? Well, if it's expiration day, see if it recovers, right? Okay, good. That just sold for us. On CFLT, we do have 14 days. So we could say, well, okay, we've got lemons. Let's see if any lemonade can be made. It's not likely. Don't count on it. But stranger things have happened. Okay. And if it's on options expiration date, you really don't have a choice, right? As I showed you on the chart, on the chain, option chain, they're both so far out of the money, they're just going to both expire worthless. Okay. So we just move on. All right. Let's see here. The other one I wanted to tell you we had some success with was just a small trade, WDC, and I'll just show you the numbers on this because it is pretty small. WDC, we had a credit spread. We said we brought in 67 cents. We said if we can get out at 20 cents, go buy it back. We did. We only had 2 contracts on this one. And so it didn't give us a ton of money, but we did eke out, let's see here, about $96. So $100. And always when we're talking about these example trades, we don't throw the commissions in, and you always want to make sure you're considering what are the commissions, right? In a smaller account and smaller number of contracts, not always necessarily a big deal. All right. Andy said, what if a put spread credit you don't want to be assigned? That's true. And so if you have a short option that's in the money and you want to avoid assignment, yeah, you might have to go and buy it back at a loss. In this case, we didn't have anything in the money, right? Both of those options were just out of the money to expire worthless. So in that sense, it's not likely that we would get assigned because it wasn't even a close call. Now, there are times when it is close. And, some traders will say, I just avoid playing through options expiration by just getting out early. Okay, that's kind of what their rule is. and they say, okay, 5 to 10 days out, maybe they like that window, and they say, I'm going to find an exit point here so that we don't get into that kind of a situation where maybe there's a higher likelihood of being assigned. I mean, we can be assigned at any time after we pull the trigger, but there are circumstances when it's deeper in the money, closer options expiration, when that possibility goes higher. Okay. Now, DJT says, now that CFLT has dropped down and maybe done, would you consider selling short puts on a 30 delta on the current price? Do that analysis, okay? See if it works for you. I haven't evaluated where is support. Is it sitting at support? Where is it likely to drop to? You know, you'd want to walk through that analysis because clearly the trend has changed. So yes, walk through your analysis. Harry had a question. Harry, I meant to answer this question for you. I appreciate you asking it. Is a trailing stop useful for profits, a profit exit on a trade? With a lot of option strategies, because the option signals just fluctuate around a lot. If you put in a trailing stop loss, sometimes it has the tendency to just get you out fairly quickly because of that volatility. Now, I would say experiment with that in your paper trading account. Maybe you get to a point and you're like, well, I've got a 60% return and I'm kind of happy with it, but if it can do a little bit more, let's do a little bit more. You know, try it out, see how that works for you. Okay, it can be a way to do it. Sometimes people will use it only on stocks. Sometimes people have been known to use it on options. And sometimes in our class, we've used it on options, just not a whole lot. Okay, very good. RTR says, can an assignment occur intraday? It can. You know, many times it happens after the market's falling, right? Yeah. All right, you guys, my time is up. You've had fantastic questions. I appreciate you asking because this is how you figure these strategies out. It's like, well, what about this situation? What about that situation? I'm glad, frankly, that we had some trades not work out for us so we could talk through these scenarios of, well, what do you do? I think it's incredibly helpful. Let me see if there was any. It says it doesn't like automating stops. That's fine. This is a highly frightening bear. Yes, this little teddy bear picture, highly frightening. Anyway, you guys, coming up next, we looked at it when we were out looking at our subscribe. We've got advanced charting techniques with Camera May. So take a little break, go get a drink, follow us on our X accounts, be a subscriber. If you found this helpful today, go ahead and hit the like button. And then go take a break and join us at the top of the hour and join Cameron for advanced trading, charting techniques. All right, you guys, we'll see you then. Bye-bye.